waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets call, balance base slow down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call, balance base drawdown, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights, let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 will match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. With a new era, the elite of the screen, navigating depths where the giants are seen. Seacrest the name, the gold standard in sight, turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision, we are the flow.
Welcome everybody, Seacrest Markets live. Happy Thursday, the 26th of February, 2026. So it looks like we've got a little bit of a new stream frame on today. Let me just double check if it switches when I do this. That's betterer. I know it. I know that's not English. Don't worry. Betterer is just a bit of a funny word. How was everyone's trading day yesterday? I mean, it's pretty crazy out there in the markets. Of course, you can see the S&P on the screen. We will happily increase it. Let me see what this does. 1 second. Oh, okay. I like that. I don't know if that works for anybody, but what is that? So that just pops it out into a different screen. Interesting. New features on our streaming platform. I'm not sure I completely like this new layout. Give me 1 second. I'm going to see if this works. Yeah. I mean, I prefer that, but I know the people behind the scenes will not like the fact that they cannot see our corporate infrastructure and banners, but I prefer this. Interesting. Okay, well, what an eventful market yesterday. Nvidia earnings came out, smashed it, but respectively, as we continue to see, earnings didn't necessarily do what I would have liked it to initially do in terms of the actual stock price. We saw Nvidia earnings come off ever so slightly, but don't let that worry you. Don't let that deter you. I think we will realistically see a close on the week higher than the recent fall off. Again, Jensen Huang continues to defy all market odds and gravitational pulls. Let's see if I'm accessing. No, I can't do it. I can't do it. I'm just not allowed to do it. No, I'm not allowed to do it. It is not allowed, people. It is not allowed. So let's talk markets as we always do. Woo! So we've got, I've already discussed Nvidia, but let's cover it a little bit more. So we have weeks of tech underperformance. We have tariff-driven anxiety. We've got opportunities for a massive relief rally, which took place yesterday, even though futures are showing a slight exhaustion this morning. It's very important to look at futures ahead of the opens, especially the US opens, to really try to identify what could be coming in today's session. Now, Nvidia again has reassured the markets. Jensen Huang continues to defy gravity, as I touched upon. If you look at their Q4 earnings last year, 73% year-on-year revenue jump to 68.1 billion and record profits. The agentic AI, which is a huge inflection point, will single-handedly reverse that AI bubble narrative, which had been pretty much dragging indices lower all of February. So it was lovely to see. Very much invested into Nvidia. I hope you are too. We are seeing obviously economic resilience out from the US with US GDP and labor data, which continued to kind of support that no landing scenario, which we discussed earlier in the week. All right, CPI data, inflation data is at 2.4%, and it is moderating. However, with the Fed remaining quite cautious, we've got that wash era to come in. We've got a shift in the bond market, which are keeping the yields near that 4% mark or 4.05%. So I think overall, the markets are going to be cautiously optimistic and remain that tone into February, into March. Sorry, blimey, we're at the end of February. Sorry. And we're seeing European markets obviously took that gain yesterday. Again, yes, US futures have dipped slightly because, let's face it, in times of uncertainty where the tone is cautiously optimistic, investors will look to take profits when the markets surge. NASDAQ yesterday was 1.2% up. So it will be something that investors want to take profit on. And if you look at the screen at the moment, I know it's to my right, but it's in front of you. The S&P 500 pretty much rallied all the way up into that descending trend line around that 69.60 level, which is also that supply/resistance level that we also discussed. Again, market-wise, our analysis remains completely on point. We seem to be able to identify specific inflection points in the markets where, whether we're gravitating towards or whether we're reacting from or potentially building ideas to trade off of. That red box that we had as our equilibrium level that was previously forming of the resistance and of the support, you can see that we had an initial reaction in around that level earlier in the morning, but it really started to kind of phase out and trade higher all the way through the session yesterday. So it was a good day from a market perspective. I wish I'd been involved. Absolutely swamped. Long term, of course, I'm involved. Like I said, I think it was on Tuesday, I was buying additional positions in my ETF or buying additional shares within my ETF. So not as much as I'd like. Not as much as I'd like. However, it doesn't matter. We're long, we're not wrong, and we're continuing. So market did try to come into that 70 level. Like I would love to have seen. I would love to see 7,000, but this could be a scenario where we retreat back off that 69.69 level, that coming back down where we're trading at 69.40 and a halves. Maybe we retrace back into around 6,900 and then we pop to the upside and we really start to see that 7,000 number really take shape. Bearing in mind it is only coming into the third month of Q1 or the final month of Q1. And we're just getting started. Okay, it could be a horrible year. This could actually turn around and be an awful year. However, everything I'm seeing really aligns with the comments I've already made, that cautiously optimistic. We buy good companies that go up and to the right, that are fundamentally sound, that are technically being supported, and we will continue to rotate around those things. So the S&P, the NASDAQ, the Dow, the DAX, the FTSE, subject to their weighting, whatever you're trying to achieve or looking to buy, realistically, the indexes will always want higher. Doesn't mean they will go higher. That's not a signal to just buy and disappear. Some do. That's why ETFs are there, low-cost indexes, sales charges instead of swaps, commissions, but of course you need to factor in the rebalancing of the ETFs and of course the cut-off hours and the fact it is actually more of the I've lost my train of thought. It's more designed for long-term holds. However, it doesn't mean you just ignorantly buy. I've got to make that clear because it would be ignorant of me to do so. And of course, we're not regulated to give advice. We're here to provide education, analysis, and I would say entertainment, but I am not the most entertaining person. I am far too professional, I think, and that's why I'm always talking markets, I guess. So where are we? Let's break down the markets. Obviously, we can look at the S&P. Yesterday, if I look at this in a percentage perspective, we rallied just under 0.9%. I think it was like 0.81%. So let's just say 0.8%. We don't look at the NASDAQ, but we always talk about it. That rallied over 1.26% on the day. So far it's having yesterday it had the best day in weeks. Unfortunately, not all stocks in indexes will rally when we see the index rally. Salesforce dropped 5% yesterday in after hours trading because of the software sector enthusiasm was pretty much dampened. Looking out into the Asian markets, obviously the Nikkei 225, that obviously continues to pretty much close near historic highs. 58,853 was the last number I saw it at, which overall it's benefiting from the global tech tailwind. And if you trade FX, the yen has stopped its aggressive slide. So we're seeing how currency exposure really affects the markets. Of course, I don't know many of you that will probably do this. There may be one or two of you in the stream that are aware of stuff like this, but ADRs are very similar. You obviously have currency exposure and currency risk in line with investment risk and market risk and business risk and all of that. So Nikkei 225 obviously continues to rally. The yen has really started to soften on that aggressive slide. Moving out into the Hang Seng, that underperformed this morning. It closed down 1.8%. So lots of trade uncertainty. You could say as well there's a lack of fresh stimulus from Beijing, which will weigh on developers in Hong Kong. So there's a lot of, you've got to look at the markets like a web. There's loads of different angles, loads of different pathways, and they're not all straightforward. And you need to consider what realistically is driving the market. How do we rotate around those particular markets to benefit our portfolio, be it a day trading perspective with intraday positions in longs or shorts on an index, or a currency, for example, or even metals or something like that. Alternatively, how does it position and bode well over the next 3, 6, 9 months in my longer term positioning on particular stocks? Like, do you really want to be long, for example, developers, be that commercial residential developers in Hong Kong, specifically around Beijing, with the lack of the fresh stimulus? You've got to kind of look at where the interest is, and that's why 2 years ago it was maybe more so looking at AI started to transform out into robotics, and there's lots of companies that are expanding and evolving that are no longer just a specific sector. So for example, Tesla, Caterpillar, Tesla was predominantly a car manufacturer. They're more than that now. They're a tech company. When you look at Caterpillar, they are literally the company that drive global construction, mining, infrastructure. But they're more than that now. They don't just supply the picks and the shovels for people to work with them. They're actually moving into AI and tech. So they've got some huge dumper trucks that are autonomously driven. So what do? They reduce their headcount. They reduce their payroll potentially, because they don't necessarily need X amount of individuals operating specific machines. They can have 1 or 2 people operating it from control centers that are safe. There's less insurance claims. Their insurance premiums go down. Which inadvertently, subjectively as well, depending on how insurance policies go and insurance premiums go, you either see insurance policies decrease in value, which means revenue in insurance companies decreases, or alternatively, due to the additional insurances required for, let's say, I don't know, goods in transit, which is, of course, can be covered for fixtures and fittings within in machinery, the value of the machinery, or other policies that they may do so require, it could actually see insurance stocks fall. But equally, their revenue will increase because the claims and the loss adjusters won't be paying out as much. So again, adjustments may be needed there. A lot of people are now not just for specific roles. And I think a couple of years ago, I realized it when my entire life I've been involved in the financial markets, whatever role that could be. It could be back office, middle office, or front office. And over the last few years, I've been pretty much all three. However, a couple of years ago, I realized the importance of really expanding out my skill set from a future-proof perspective, not only just to be all of those three and everything in line or underneath or above them, but also adding in new skill sets, continuously adding in certifications. I've always been that way inclined, to be fair. I've always gone after new certs, new regs, to continue to be very well decorated in the markets from a certification perspective. For my own needs, really, if something comes out, I kind of want it. I want the new cert. However, also from a skill set perspective. So, before we had all of this kind of pseudo coding and vibe coding, I really started to transition into Python, because Python is one of the predominant features and coding languages used in finance. So also making sure that I've really future-proofed myself out. And if you come down to being a PM, or if that's where you want to go in the markets, or you want to be a specific trader in the professional line or the institutional line, you're no longer just a finance professional. You're almost like a financial tech professional, because you're coding, you're building security, you're understanding logic, you're looking at the syntax, you're figuring it out, etc., etc., etc. You may not necessarily be the fastest, you may not necessarily be the best at coding or syntax or whatever. Of course, in the last year or so, it's become even more advanced and better, because people can now code through LLMs and AIs and all of that jazz. They can build programs, automations. Doesn't mean they're going to take over the world, but if you can strengthen your future and your career, if you're already very well experienced, if you don't adapt and evolve, you will die, essentially, in your market. You become, a bit of a dinosaur. So companies now, if we revert it back to the original point, if companies now do not adapt, do not evolve, they do not become more than they are, they will fizzle out. Like, look at PayPal. We can even talk about earlier companies, if you're old enough. Blockbuster, which was a huge company in the UK, Woolworths, Debenhams, lots of companies. If we look at PayPal, sorry, I was thinking of Blockbuster. Even Blockbuster was the biggest entertainment company in, from what I know, the UK, to be the very least. They provide videos, DVDs, game rentals, movie nights, snacks and treats. It would be a privilege that your parents would take you to Blockbuster on a Friday evening to buy a movie, to rent, to watch over the weekend. It's kind of like a library for those of you that are unaware what Blockbuster is or was. You rent a DVD, you rent a movie, you buy some sweets, you maybe even rent a game. You could rent games. So, PlayStation 1, Nintendo, PlayStation 2, maybe. I think maybe Xbox as well. I can't remember when that came out, but I'm sure it was around then. You could rent this, and then you'd rent it for a day or two, maybe rent it for a week. You then take it back the following week, post it through their letterbox, and you rent it all over again. You have a Blockbuster card, etc. They had the opportunity to buy Netflix. They turned it down twice. So if you look at PayPal, in my opinion, has been in a similar situation. And I was watching the stock for over 2 years just continue to fall. And there was only two ways out of it for PayPal. It's either be bought or go bankrupt. They don't have a specific moat anymore. There's a lot of misconception about how much of the market share in terms of commerce PayPal actually owns. But PayPal had the opportunity to buy specific companies, including Stripe. Now, Stripe has been rumored alongside a few other companies that are interested in taking over and buying and acquiring PayPal. So similar scenarios will happen continuously in our lifetime. if companies don't evolve, if they don't adapt, they don't expand, they don't innovate, and they stay where they were, they do have the risk of basically becoming extinct. So that's what we continuously see in these marketplaces. And I think that's why I've got some very good friends that are talking about specifically where companies are going in the next 5 years. Like, look at defense companies like Kratos, big industrial mining companies and machinery suppliers like Caterpillar. How are they advancing? How are they evolving? And from a day trading perspective, the reason this is relevant is we want to understand what the constituents are doing in order for us to understand where realistically the indices are going. If, from a weighting perspective, all of the constituents are trading lower day on day, they're trending down, lower highs, lower lows, and it's continuously bad news, and there's no evolution to that company, they're either going to be removed from the index, they're going to be bought out. But ultimately, we look at it from a day trading perspective. How are the indices going to perform? Yesterday, of course, we saw, like I said, the indices rally. You know, the S&P just over 0.8%, the Nasdaq 1.2%. So we have the ability to understand on a macro level what's going on, a micro level by the constituents that are inside these indices, and we also have the indices as well. So how do we look at an index from a technical perspective? If you combine all three, so if we would call it fusing analysis. So we combine fundamentals, which is economic, macro, geopolitical, try to kind of combine all of those and understand the move. We have the micro, which is all of the companies inside the index. So we'll look at the stocks. You don't need to become obsessed with them, but understand that. And then we have technicals. We have 3 layers of understanding perspective on what the market could be doing, whether that could be ending up the day slightly green, flat, slightly red, or massively red, right? The nuggets are in there. I'm not sure how I'm going to piece that's next, the thing I'm going to want to say next. However, hopefully you can extract as much of the nuggets as you possibly can, because it's very difficult to dissect a lot of what we have, what we've seen, what we go through in a daily basis. And there'll be some of you that can expand on what I've just said quite comfortably and really look to take on board what we've said, or maybe try to figure out what nuggets there are available and do something good with it. So without further ado, because I've gone on a big rant, let's actually take a quick look at the S&P. We've already briefly discussed it, so we won't look at the 4-hour chart for much longer, but very quickly, 4-hour is reacting to a weak supply high. It's also at the range high. We have a descending trend line that we mitigated and tapped at just under that 69.70 level. The expectations on price at the moment would be, if this supply level is going to hold, we would be expecting a pullback, i.e. markets to move to the downside, trading into around that the lower area of the 69 level. So realistically, 6,900 into about 6,925 would be a good pullback area. From there, we may be able to look for continuations to the upside. And today, coming into the end of the month, maybe we see 7,000, which we don't want to get too excited about, but it would be great. I want to see higher prices. Why? The higher the prices, the more positive we can be, the better the economy is doing, the better companies are doing, more people are employed, more people are in work, more people are making money. And that is, realistically, that's what matters, right? I know that people always talk about, oh, let's have AI and let's not hire people. But that's not humanity. You know, some people will just say, well, who cares? You know, who cares about hiring people as long as we make the most money? But coming down to the nuts and bolts of it and looking at morals and values, whilst you just want to do the best for yourself and the best for the people around you and have the best intentions and make sure that you can provide for your friends and family, you also want other people to be able to do that too. So the better the economy is doing, the greater, I feel anyway. You know, when we had the GFC back in 08, 09, I was still early into my professional career at that point in time. And it was horrible to see, you know, unemployment levels, bankruptcies, repossessions, delinquencies, lives being ruined one way, shape or form. I won't go into great detail. And it really affects people, I think. It really affected me because I hate seeing people lose. I hate people seeing suffer. It doesn't matter whether they're a bad person or a good person. A bad person, I don't mean really bad. I mean, you know, just maybe they've been bad to horrible to you. I don't mean people that actually deserve it. It's not nice to see them going through really, really hard times and struggling. Yes, it shapes you. Yes, it makes you a better, potentially have a better character if you can deal with it mentally, emotionally, physically, and all of that jazz. But it's horrible to see, like when COVID hit, and I was talking to neighbours, and my neighbours were saying, "Oh, work's really dried up. I'm not busy," and I just worry for them. I look across the street and I think, wow, they may lose their house. There was one person that did lose their business, and it was such a shame. And he lost his business. He actually lost his house. He had to go with his family. He had to go back and move in with his parents. He had a daughter. He had children. He had a wife. He needed work. I think, you know, it's horrible to see. So it doesn't make it easy just because the economy, if the markets go down, lots of stuff happens. But listen, we are traders. We're here to make money, whether we're long, whether we're short. We just want to make money. That's the end of this game. That's what we're paid to do. It doesn't necessarily mean we can lose touch with our human side. So again, I've gone on a tangent. Let's go down into the M15 because you can see the 4 hours rallied. What we want to do now is make sense of it. And we did. We discussed it during yesterday's live. As you can see, we had that initial move to the upside that we were discussing from the prior Tuesday, and we were looking at how markets are ranging and what we wanted to see next. We had the resistance level trading up, that red one at 68.94. We wanted to see markets show a break above that. We then wanted to see demand continue to hold, and then we could look to get long. Now, a couple of comments here. Demand remained in control, okay? So you can see here, we've got this last point of demand that very correctively, didn't do the best job, did it? Very correctively broke to the upside. Still did its job, right? Doesn't necessarily mean it did it the best, but it still did its job. Price then came back in and tested that level. Now, arguably, we didn't sweep the low, but we did have a candle that was considerably a sweep of internal price action. So this candle here with this big wick that you can see, it did sweep all of the internal structure. It didn't sweep the extreme of the low, but it did sweep internal structure. Obviously, we only really get that confirmation from pretty much this level here because that's where it breaks out. But demand was in hold. Demand obviously was showing that we were going to continue to trade higher. It's now your job as a trader to identify how you get involved. Whether you wait for price to trade above the high of 6,900 and we continue out into the remaining part of the day. Obviously throughout Wednesday, all the way trading up to the upside. And if there's any opportunities maybe on a higher time frame or a lower time frame that you could potentially see fit. And if we just look at taking that higher, like so, we have that breakout to the upside. We've cleared that 6,900 level. We now think that 6,900 is going to be a point of demand. Do we get pullbacks? Maybe we add it to that. We don't get a pullback into the level, but we get a rejection from that demand there. So let's use that demand just because we're trying to fit price. We're not trying to hindsight, we're looking at it from a theoretical perspective now. How could we identify and break down what the market did? So we have a rounded top, demand was supported, it's then come back in. And from here, you may have been able to get in maybe on this candle around 2 p.m. yesterday, just before open. So 69.16, give or take, would have been about where you get in. And then you're just holding that to whatever fixed R you want to hold it to. You may even be holding it now. But market was giving you and showing you the signs that we were breaking higher and we were failing to break lower. Combined with other factors, we could stay long. So where are we sitting now? Very similar scenario to how I always discuss it. You know, early on, we needed to see confirmations that market actually wanted higher. But we look at where price is now. I don't like shorting the tops. However, we can see that there is going to be some resistance up and around this 69.50 to 69.70 level. We will still be looking for longs. So, okay, once price comes back in, you've got this area here, which we may need to go up to the actual pullback level. It's just such a big level that sometimes people don't like doing that. We have a reaction from it. So this is the level here. So supply is holding. Demand is also holding. So we're pretty much tight in that range. Why is supply holding if demand's in control? Is it because we've reacted to that supply that we're now looking for shorts? Again, we're not officially short because we would be unconfirmed. Why would we be unconfirmed? Although we've taken out demand levels to the left, we at this point here, we had not come back in to retest some form of supply, and we had not confirmed that we were going short. So longs are still on the card. So if demand is still in control, momentum is still to the upside, overall tones are still bullish, longs are still in play, but we're bearish unconfirmed, we need to be optimistic. So we need to be cautiously optimistic. So we can still be long, but we're coming into supply. So as we're coming into that supply or resistance area, we either need to do a couple of things. We need to trim our long position, start taking profits, or we just manage our risk. If you're not in a position, you just sit on your hands. Because if you do believe the market's going to turn here, then you don't really want to be long. Alternatively, if you are long, like I said, you're trimming your positions, you're managing your risk, and or you're just holding it to follow the momentum with the expectation that actually this level is weak. We're going to be trading up into 7,000 levels over the next week or so, if that's what you want to do. And again, with Seacrest on the CFD broker side, of course, you can hold your positions for as long as you physically want. There's no rules. There's no daily drawdown levels. There's no maximum risk per trade. Everything is definitively defined by margin and leverage conditions. And of course, we offer dynamic leverage on every instrument that we trade with or offer to our community and traders up to 1 to 500. So multiple instruments have up to 500 leverage. It's entirely up to you how you manage your positions. And there's no profit splits. You don't have to worry about profit targets, profit splits. You get to trade how you want, when you want, in what you want, and withdraw what you want. Be that $100, be that $100,000. Your profit, you take it. And as a true STP broker, all we make is obviously from the spreads. That's it. Spreads and commissions and swaps, sorry, the markups. So current expectations are remain long, cautious as we trade into the highs. Would be looking for right side price action. Ideally, I want to see something like this. You know, we've got this break here. We have this hold. I'd like to see us push up a little bit more, and I'd like to see us come back into something in here. And then maybe I could consider getting long from something in and around those areas and just continue in. But again, longing into supply is a little bit risky. So you have to bear in mind, what is that supply? Is that supply just formed of a recent price action that's actually potentially still weak? Is it a historical supply that's actually got levels traded off of it? This one isn't. It's obviously coming from a higher time frame supply on the left. This is actually just a reaction to that level, but we've not done anything significant just yet. So if we are going to break down, for me, I'd want to see something like this. I'd want to see 2 breaks of structure to the downside, ideally, maybe a pullback. Once we get that pullback, I'd look for momentum to the downside, and I'd be looking to get in something in and around here. And again, if that doesn't get the pullback and we pull back into this and then we do this, then again, similar scenario. I'll be looking at the momentum to try and identify a probable scenario. But it's very difficult for me to short indices. I would much rather be long. So yeah, keep an eye on the S&P. I am short euro, dollar, and Kiwi. What's your view? We can move into euro, dollar now, actually. Featured. Actually, I'll just go into my one. One sec. I always like to look at the DXY first. Why did we put this on here? I can't remember. Oh, I think we were talking about if this trades down. Yeah, that makes sense now. Let me move that one, because as you can see, what the expectation is price to trade into here, break down, and we get short based on that RR tool. Obviously, we didn't get that, so we were not interested in taking any positions. But as you would have seen, it would have failed. So where are the markets trading at now? So we had this extreme supply, we had this decisional supply. The decisional supply got smashed, so we traded into the extreme. Extremes for me are primarily always the region that you want to be trading from, whether that be a support level, a resistance level, a supply or demand. There will be decisional levels, but again, when decisional levels come into play, you need additional confirmations, additional confluences in order to actually get involved. So what are we seeing at the moment? Now, actually, let me look at DXY, because DXY is going to give me the inversion of euro dollar anyway, right? And we always talk about the DXY before we shift into dollar anyway, but it will give us a better picture. So you are short euro USD. Okay. So you're short euro USD, which means essentially you're long the DXY. Now, since week Wednesday, we've obviously had that break to the upside. I still see dollar long, so I think euro shorts is a good call. So if you look at how this market wants to trade, and we're only using these patterns to get an idea of what market may want to do, not will, okay? So in terms of how candles obviously move, we'll have that bullish move that we expect the expansion to be to the upside, because that's how it entered the bullish flag. Now, I'd be long the dollar either from the extreme, or I'd be waiting for confirmation with momentum to break to the upside. The daily does look poised for higher prices if you're just looking at how this pattern's developing out. We're seeing prices struggle to maintain lower prices. Yes, we're having a small dip, or we had a small dip this morning, and yesterday we had that pullback on pricing, which when we go down into the lower timeframes, you'll see how we broke these markets down yesterday during the live stream. We were trading out of that supply from 24th of February, which, let me just expand it out. You obviously got that bigger supply as well, which is denoted by the black box. So, wow, okay, so yesterday we reacted from pretty much a higher low. So if you look here, we've got higher lows all printed in market. Demand was still in control. We traded back into supply. We swept or fake braked above the highs here. We then broke down. No structure really here. Demand was still holding, or support was still being respected. Like so. So we're bearish unconfirmed on the M15. Doesn't mean a thing. Lower time frames, lesser weighting at this moment in time. So realistically, I'd want to see the DXY rally a little bit higher into about 97.82 if shorts are going to be lived. I can't see them being lived when you look at how the higher time frame is shaping up. We have obviously this support level that was respected, which also aligns with the 4-hour and the daily low that we were just discussing on the previous time frame. So the expectations right now for me would be, after this break, expectation to maybe pull back into support, like so, and then maybe see that continuation to the upside, which would inversely mean that the euro is going to go lower. However, when we come into 97.85s, 97.90s, we need to see how price trades around that, because if this supply level is holding and we are going to be ranging in between 97.45 and 97.85s, then as we trade out of this supply to the downside, it means that the euro is going to strengthen. So if you're short euro, there is that probable chance that the price will start to pull back. Or if you're looking for shorts on euro, maybe from where Anthony's just said, 117.70, then markets may actually need to be getting up there before, getting down there before we actually hit anything. So swing-wise, at the moment on the M15 on DXY, we're expecting higher prices, which will mean that the euro is going to continue to trade lower for a little bit. If we look at the front leg on euro, we can see that we've even broken demand to the left now, right? So we've got this area of demand here. We've broken that. We've continuously broken demand on the front leg. You can see lower highs, lower lows. I do think markets are primed today for a pullback. So I think we could actually see maybe 118.15 in euro dollar, around that area, 118.15, 118.25. So about the 10 pip range on that price, which if we're short, if let's say we're short already, from here, we would want to see this level hold, and then we would want to see markets continue to trade to the downside, lower lows, lower highs being printed, momentum continuing to the downside, and then we could maybe look to get involved somewhere in and around these areas. Initial targets would be those lows around 117.5. Then we would need to identify what's going on the mid time frames and the higher time frames to actually stay short, or do we just take a bit of profit, manage risk, and so on and so forth. So if I just quickly come back out to the daily, we had that initial reaction. I think, looking at the daily, if we were managing those short positions that we would be getting into around around where price is at the moment, it's trading at 118, big round psychological number. I mean, we could actually definitely open up 116s. We could definitely see 116s if markets do want to continue drifting. We've got lower highs and lower lows have been put in. There is obviously the chance that we pull back in to make a lower high around 118.75, around 119s, and then drift down to 116.5. It doesn't mean we can't do either of those, but let's see how market develops out. I'd need to see momentum on the lower time frames to actually consider getting in. I mean, I'll just go down to see what's going on the really low time frames, but break, comes in, break, comes in, we sweep, we break, we come in. I mean, I can see why you'd be short from about 118s, 118.10s. But there's a lot of traffic to the downside. So just keep looking left. GBP NZD, a pair that I haven't looked at in a long time. As you can see, it's not even on my watch list. Let's go Fuxum. So your short pound, New Zealand dollar. All right, so let's quickly grapple. Bosch. I don't like that level, but we've had these breaks. I'm surprised this high held, but it was a sweep, so we've swept that. Fake break to the upside. Supply's then been respected. We've then subsequently broken the ascending trend line. We've then drifted lower. Looking to the left. This was the last level that broke this. Haven't even. And no reaction. We had a reaction there. We had reactions there. So this was that level. Okay. So that was this level. This level then caused that move. This level caused that move. Inherently, this low was weak because it failed to take out this high. Also, we had the sweep, so we knew this low would go. We knew this low would then go. This, so that failed that. We then shifted. Okay, makes sense. It makes sense. So from here, my initial view would be I'd be expecting a pullback into 229s. That would be my initial expectation. But looking at how most of these levels have had very minimal reactions to, right? Every demand level that we've been looking at as we've traded down. If you're short, you're short. I'd like to see something break lower. I'd like to see that low go. We take out this low. I'd then like to see a pullback into about 258s. 225 eights to 226, maybe 227. Alternatively, if I'm waiting, I'm not looking, I'd be looking to see how price trades into this level if it can get back up there. Going down into let's go down into the 60-minute because 4 hours is going to be too closely aligned at the moment. After we had that reaction to the lower time frame demand, the higher time frame demand. Come on, it's not done it. 1 second. We had the supply fail. Demand just traded inside these big impulsive Marabuso candles. We had a break up. Pulled back in. Oof. I can't see shorts at the moment. I can't see shorts on the 60-minute. Sorry, I'm going to talk you out of your position. I mean, I can see that we're trying to take higher, but we're not exactly committing. We've got a higher here that's failed. We've then got the change. So we've got this high go. We've got this change. We've got this. But I feel like they're just pulling back into this to then take us higher. I may be wrong. I hope I'm wrong. I hope I'm wrong for your short. Sorry if I'm not. And if I'm not, then I needed to be long. But I'm not long. I've got no money in the game on this particular position. So breaking a retest of 225.50 would be tempting. 25.50. I'd prefer to see a break and yeah. Yeah, I guess you're right there. But this level's holding. Again, if we're long, like in the last scenario, if we were long into a level, we stay long and just sit on our hands and manage risk. If we're short, we stay short and look for the failure of this level, then a pullback into this level, then go. So I would say a break of 25.20. 25.20 would be my main one, but even looking at the front leg, I see why you could say 25.50s could be a break. Then a retest of that level around 25.50s, 25.60s would be interesting, but that's just trading the front leg against where markets could want to go. But yeah, it is. Sterling Kiwis quick. Wait, gold. Mario. Wow, Mazza. One of the muscliest people I've ever met. Well, not met, but no. Mario Amber. What do I see for gold? We always cover gold on these live streams, Mazza, so don't worry. We will take a look at that momentarily. We always break down the S&P, the DXY, euro, dollar. We do cover metals such as gold, silver. We also cover Bitcoin. And traditionally, we run out of time. It's 9:51 right now. I've covered four instruments actually today. I've covered 4 instruments today. You cover Kiwi, cable Kiwi as well. So we will now move on to gold because we always like to break down gold. I mean, it had a great day yesterday from what I understand and what I could see. So hopefully you were well positioned in it. I hope the trading's going well as well, Mario. I haven't spoken to you now maybe for about 12 months, maybe a bit more. Let's have a look. All right, so ignore the levels. We talk about this all of the time. So if you've not seen any of our live streams, go back and look over the recordings. We were looking at initial longs on that pullback from around 4,500. We wanted to see trade back into at least these highs, about where we're trading right now, right? And this is just the higher supply. It doesn't necessarily mean it's strong. It's not really done anything on structure to the left. So the expectations are that we could see higher prices. However, we can't be ignorant and we need to be cognizant that the market could respect this supply level. If you look at how price is trading at the moment over the last 4 candles, it's very range bound. The market is trying to decide what it wants to do next. Now, a couple of inside days so far. We're ranging at around that 5,200 supply level. Again, psychological number. We need to be mindful of what's actually going on in the world as well. Geopolitically, with the Iran tensions, we're obviously inside that 15-day, warning period. And markets overall are really uncertain. People are worried. So we go down into the 60-minute. You can see how we broke these markets down throughout this week. And I always keep the analysis on. I've decided I'll keep it on a month-by-month basis. So at the end of February, I'll reset all of these. I'll panel them up into a specific folder. And we'll start afresh from March. But as you can see in the charts at the moment, we've got demand holding. We have supply holding. So we've got a big range. This level here yesterday when we drew it was untested. So as we came into late UK GMT, 8 p.m. UK GMT, markets obviously rejected that 5,100 and a half level and we've reacted. So we're still trading inside these ranges, right? So for me, Mario, you'll remember this. We can trade from the extremes. We can get short from the highs. We can get long from the lows at the extremes of a range, which, had you have been doing that, had you have got short from yesterday, 5 p.m. following the live streams analysis, actually, no. I can't say that. Had you have built up your own ideas following the educational analysis that we provided during the live stream yesterday and gone on to build up your own execution methodology, your own idea and your own signal through your own generative edge, you may have got short around 5,200, which is the extreme at the high, risky. Probabilistically, it's still available, but it's risky. And you would have potentially looked for targeting the extreme low, which would have been in and around this area here at the time. So around 5150s. Now, if you wasn't being a dick for a tick, 5150s was tapped, subject to spread. Brokerage spreads at Seacrest are very competitive. So you realistically, during prime conditions, would have had actually a nice tight spread. Can't speak on behalf of any other firms. However, coming into 51.50s, you would have been liquidated on your TP. Had you have not, potentially you'd be sitting at around break even or a lesser TP had you have actually manually taken yourself out. Now, markets are trading once again at the extreme. It's not the absolute extreme, but it's the lower high extreme. Again, it's weak, okay? Has to be weak because we're not creating new highs and new lows. We're now continuously making higher lows. We're continuously making lower highs, as you can see, right? This is your higher lows in market, and this is your lower highs. So market is ascending triangle. It's in a wedge. We need to really consider looking and waiting for markets to break out. If you want to get short, do it at your own pleasure. But if you're not going to short from the extremes, you want to see momentum kick in. You want to see ideally break, retest, continuation, break, retest, and then you could look for continuation to the downside. Alternatively, if we flip that, we'd be looking for something like this and then continuation to the upside. We had been through a period where indexes were trading higher and they were also hedging out their risk by being long gold as well. Are we still in that period? I don't know. I'll be honest. I don't know. So for me, based on the existing market conditions, even though we've got uncertainty in the market, I do favor shorts in gold. However, with the uncertainty in the economy and the way this market's moving, we could see higher quite comfortably. We could comfortably see 52.50s again within the next, I don't know, week or two. If the uncertainty continues around tariffs, around Iran, around global stability, bearing in mind we're also leading into next week, which is the first week of a new month. Obviously, we have rollovers. We have big, high impact red folder news coming out next week. So there is that chance that markets are going to want to trade higher because we're uncertain about what's going on in the economy. And if the investors and big boys don't hear what they want to hear or see what they want to see, we could see gold trade higher into 52.50s, 5300s even, right? Like they just call it a level, 5300s. But as we trade into the pointy end of the ascending triangle, price will be really tightly wound up like a spring. So we'll be looking for the expansion on either side of that position. And again, there's 6 to 8 minimum different ways this market could trade out from this pattern. So we're not being obnoxious. We're being fully present, fully aware of what could happen in the markets, and we'll trade it as we see fit. But that's pretty much where I see gold, obviously on a 60-minute time frame. 15-minute probably doesn't paint too much more color. We're trading inside the range. We'll be looking at extreme longs, extreme shorts, and ultimately we'll be looking at how price could break out either to the upside or the downside, and then looking to react to market conditions, proactively react to the market conditions. And that's all we do. It's what we've done all along. Supply on the M15, supply is looking like it's trying to take control in the most recent efforts. So I could see price trading lower. Look, there's arguments for both sides. I am undecided. I need to see as we break out. I'm not interested in looking at something until it breaks out on this particular range. I would want to see either this or this. That is it for me. And I will react to the markets accordingly. Hopefully that answers some of your question, Mario. I'm not looking for shorts until 225 is taken on sterling Kiwi. I missed that comment. Okay. Let's take a look at Bitcoin to wrap up the session. We've got 1 minute, but we can quickly take a look. Trading up, range bound PA all through yesterday. What a day, Anthony. Text me if you need me. Have a good one. So expectations were for price to trade off of these levels somewhere in and around here, then trade higher. Obviously, we were trading inside a range. As you can see, we've got overall these highs sitting in and around here. 15-minute demand was in control. We are starting to show signs of slowing down and a shift. Again, could that just be a temporary shift in market conditions? Like so, you know, we've got that change of character. We've got this sitting here. Market is ranging like these. This is the position we're in. Markets that are ranging right now. So the US really opens up our day for us, because if you look here, we had a push down. Supply is being respected. Demand has failed to go. So now we've got a strong demand, which means this high is weak. But we're also in a lower high, higher low situation. So for me, again, I'd want to see something like this. If we're going to do this, then I'd want to see something like that. And then we just trade it how we see fit. So other than that, traders and gentlemen, I've got no more comments to make. I've got no queries, no more coverage. There's no more questions coming in from the channel and the feed. As always, I do value every single one of you that are viewing the live streams and watching these recordings. As always, I love your support. If possible, please go over to our channels, like and subscribe, turn on notifications, follow our X, follow our YouTube, follow our Facebook, follow our Instagram, and make sure to retweet, reshare these live streams so that we can get more people watching, better informed, decent education, powerful analysis, overviews of macros, including fundamentals on the micros and the technicals here. And join us. I'm here every single day streaming, live streaming Monday through Friday. Same time, every day, every week, until I'm not. But other than that, as I always say, and as I always part on these things, trade safe, trade smart, trade Seacrest, and I'll see you this time tomorrow. Thank you all, and have a good day.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions